Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications when we go live, tap the bell. Definitely appreciate you're here. Hope you had a great Christmas, had a great weekend, 4-day weekend. If you took the weekend off like I did. Hope you all stayed safe on Monday and today. If you're not yet a member of our free options trading group, the link is below. We also have a Discord channel, which you can get access to with the link below. So if you're not a member, if you are a member, we're growing pretty quick. We're almost $900 in our Facebook, 900 members. Think about money. 900 members in our Facebook group, and we have over 200 members in our Discord. You know, not huge, but we're very consistent. So if you're here right now, say what up. I see a bunch of people in here already. Who is in here? Tobin, Hornet Gamer, Shotgun, Easy, 7-Day Options, FC, Mitch, Ray Lee, Oliver, Greg, Michael, Jeff, Bobo, Crypto Slice, welcome back, Scott, Amon, and a lot of new faces in here. Definitely appreciate you guys joining the stream. Matthew, how you doing? Hope you all had a good holiday. If you don't celebrate Christmas, hope you had a nice little break. And today was definitely did not think today was gonna be like this, like a 1200 point up Dow day. I mean, I thought we were gonna go up. So somebody in our options trading group had a poll last night if we're gonna be up, like if we're gonna be green today or this week or not, and I voted yes. I just didn't think it was gonna be. I didn't think it was gonna be like this, you know. Which, you know, I don't mind. I guess I don't mind as long as you're on the right side of thing. When the market moves this much, you have to be on the right side of it because it moves way beyond the expected move. Like it moves way beyond what you think it's gonna be, you know. So if you made money today, comment got paid. If you lost money today, comment learned a lesson. Hornet Gamer, what's up? While you guys are doing that, today I'm up 265 to 300 per account. I'm down $40 on these gold futures, but thankfully this is the only account I traded the gold futures on. They expired today. I had a position that I put on Friday. Didn't work out. It expired. It was a small trade, $40. But my other trades, my other accounts didn't have this position. This is the only account that I had /GC on. Keith, what's going on? Rich. Hey Marine, how you doing? JDM got paid. Nice. Amin learned a lesson. As long as you keep learning, man. As long as you keep learning. Now, we'll go through the trades here. As you can see, a little bit mixed here, mostly green, but Chinese had gold out, copper. I closed out my SPX today. It was the only trade I closed out. For the people that are just joining this channel and haven't watched this before, if you don't know, to give you some context, I actually cleared out a lot of my trades on Friday, mainly because I wasn't going to trade Monday and it was going to be a short week, and I really wasn't going to. I really had no idea what this week was going to be like. So I took off all my risk, I cleared the decks, and I started fresh actually today. Today I started putting some trades on. The only thing I had on before today was USO, which expires about 5 days from now. It's in January, and GLD, which expires in a couple weeks, which that got killed today as well. But you know, we're still down a little bit. But you know, going back and forth here, kind of walk you through what we did. SPX, I got a little bit better pricing on SPX on Tastyworks just because the fluctuation on my accounts or during the day. So like when I was placing the trades, the fluctuations in the pricing. Like here, I got $1.65 at 10.55, but then over here on 10.55 and 46. So literally 40 seconds later, I got $1.55 credit, so I got $10. I got $10 less. On that. So just to show you how fast the market was moving, within 40 seconds. I mean, this trade changed. Not a ton, but $10 is $10. Congrats, EZ, on the profits today. Congrats. So this morning, we're gonna talk about SPX because that's where I put my first trade on. So this morning, as you guys know, the market we gapped up this morning, and then we kind of came back down to this 2346 area. And I've been looking at this 2350 area. I didn't think we were going to hit this area. It was resting at 2350 on Monday, on Christmas Eve, on that short day. So I was kind of eyeing this area. I was kind of seeing if we were going to break down below 2350 or we were going to go above 2350. And the reason why I'm talking about 2350 is if we go to the 2-year chart on this, obviously the 1-year chart's broken. But if you go to the 2-year chart, and let me make myself a little bit condensed here. If you go to the 2350, right around here is where we had pretty, I wouldn't say solid support, but probably the best support we've had in a while. It consolidated around 2350 for an entire month back in April of 2017. So it was really keeping an eye right here. 2350 was one of the last consolidation months before we went up from 2350 all the way up to like 20, almost 2900, 2875-ish, 2873, somewhere up in there. So I was really eyeing that to see if this area was gonna break down or not. And as you can see at the chart here, we'll zoom in. Pretty much bounced. Today did go below 2350, but pretty much, I'm not gonna say double bottom, but it could easily, because the amount that we went down. I mean, how many red days did we have in a row? We had like 10 like 2 weeks worth of red days in a row. It could easily be a dead cat bounce, but also technical indicators like support and resistance, and it bounced right off support. So I'm not saying it's not a dead cat bounce, but always keep in mind levels of support and resistance. Always keep in mind. So this morning when we came back, I was pretty much playing it slow all morning because I really wasn't sure if it was going to give the gains up. And then we started, the first 15 minutes we were kind of fluctuating back and forth, and then the next candle, at 8:45 or 15 minutes after open, we started to head lower, and then we had a decent half hour of selling or so before it was consolidating, and then we came back down to the 2350 area, which, as you can see here, we just kind of leveled out here, and as we just kind of went up from there pretty much all day. So as we started recovering, after we got above the high here, after it broke above the high right here at like 2376, I was looking for a trade, and I wasn't looking to buy the premiums. Like this morning, premiums were outrageous because we had a 700 point down day on Monday. At open, premiums were just outrageous, especially on puts, and calls were outrageous because people thought it was going to bounce. So like when calls and puts are both expensive, VIX was over 30. Really, there was just a lot of speculation in the air, and it doesn't mean that anything is true. So that's why I kind of waited out, kind of see what we were going to do, and that's why I started out selling premium this morning. So I did sell SPX. I sold the 2360 put and the 2355. I bought the 2355 put, so I did a vertical put spread, $1.65, and then I sold it at 223. So in power hour, I sold it for 70. I bought it back for 70 cents. So we made 90 bucks, 95 bucks on it. What I do know about like credit spreads, put spreads and stuff like that. Once you get below $1, the juice gets a little bit harder to squeeze. So as you get towards 50 cents, like these were expiring, this credit spread was expiring Friday. And as you get closer to 50 cents, it gets harder to make money. So it's better to take the trade off. So I definitely probably could have made another $10, $15 on this, especially when I took it off was like right before, like really, it was right in here, right before it really decided just to take off. So you know, I definitely could have made more money, but at the end of the day, I was risking. I had like three to $400 worth of risk on the table for $15 or $10 worth of gains. Doesn't really seem worth it. You know, take the risk off, and if you want to get into a different trade, get into a different trade. You know, and that's exactly what I did. So on put credit spreads, really what I'm looking at is like 50%, but in this kind of trading environment, especially with the back and forth, I'm not looking to get too greedy. But we did hit almost 50% on this. You know, just a little bit short, but definitely happy with the way that I didn't have to carry any risk over in tomorrow. The other trade that I did today at 11. So you know, as you can see, my trades are very spaced out here throughout the day. I mean, I did open SPX and IBM were kind of back to back, but I did allow some space here. So, Rich, I did put a Microsoft trade on. I will go over in a minute after my IBM trade here on why I put this trade on. So, on IBM for $1.40 debit, I bought the 109 call, 104 put. Let's go to Microsoft here. So Microsoft, we put this trade on. So as you can see, when I put the trade on, the price of Microsoft at 11.07 this morning was, we were also breaking above here. We were at like 97 and some change or so. So we're at like 97 and some change right here. And really before it consolidated and go up, like my goal for Microsoft. So I got the 99.50 call and the 96 put. My goal, so it was around like 97.50 or so. You know, it was more bullish. Actually, I think it was higher than that because it had to have been higher. IBM. Oh, I'm talking about two different trades. I'm sorry. I'm talking about Microsoft when I should have been talking about IBM. Okay, let's talk about Microsoft. I totally messed that up. Sorry, guys. We'll go back to IBM now. I'll tell you why I put IBM. But since I'm already into Microsoft, at 227, I put Microsoft on after I closed SPX. So I closed SPX. I put a Microsoft trade on, and really because premium came down quite a bit, I bought the 99.5 call and the 96 put on Microsoft. Sorry to confuse you guys. I don't know what I was thinking. So around 2. So it was kind of flatlining around here. You know, it was kind of just chilling, while everything else was ripping. So I figured that it may get a rip into close, but I wasn't really sure. My goal was to swing trade this, and as you can see, Microsoft just ripped right through 99.50, and that's why we're up on this trade. You know, we're up $57 on this trade, so we got a little cushion going in tomorrow. I really wasn't planning for Microsoft just to rip through 100 like that. I thought I was going to play some games around like 98, 99 area before ultimately heading lower, or if it got rejected, like if it got rejected at the 98 area up in here, if it got rejected, you know, I had the 96 put. As you know, today it did reach a low of 93.94 or so, like 93.94, 93.90. So I had the 96 put. Just if it gets a hard reject, it's going to go down fast. So you know, we were playing it safe, and the put was really pretty cheap because it was going up so much. So Microsoft, the put was really cheap, and it was $1.54, and IV really came down to that. Now let's go to IBM. I believe Microsoft will go to hard again. Yeah, so Microsoft, you know, Microsoft definitely, I mean, it's kind of like everything. All the charts look the same today. You know, Microsoft could definitely, I think, revisit like 106 area, 105 area. But, you know, who knows when. You know, it did bounce right here, like in the 95 area. You know, it's hard to say. It's hard to say if it was a dead cat bounce or if you know, the bulls are returning back to the market after weeks of selling. You know, it's too early to tell. You know, we definitely need more data. You know, you can't like for now, like I'm not going in, like, you know, right now my positions are long, but I'm not. But as you can see, like a couple months ago, I had like 8 to 12 positions on it the whole time. Nick, your cam is grainy. I'm on 1080p. Not sure if it's me or YouTube. YouTube says I'm streaming pretty well. I'm streaming in 1080p. I don't know. Not sure. Anyways, yeah, for the dead cat, we just like as you guys know, a couple months ago, I did 10 to 12, I was having 8 to 12 positions on. Now I only have, going into the end of the year, I only have 4 positions on. You know, I did have 5, but I took SPX off. So I really scaled it back to like 2 to 5 positions. And because really I want to end the year strong. I want to end the year on a high note. I just want to close out 2018. I'm not looking to, you know, make thousands of dollars before the end of the year. Like the gains in the account were definitely unexpected today, which, you know, I definitely appreciate. You know, across my accounts today, I'm up around $1,200, which I'm definitely grateful for. But whether you're a bull or a bear, you got to be careful and just follow the price action. IBM, so going to IBM, $1.40, I put a $1.40 debit. I bought the 104 put, 109 call this morning at 11:07. And the reason why I did that is, if you're looking here, what I look for on stocks that I trade on big moving days are kind of like late bloomers. Is there was a lot of price action, as you can see here. SPX was going up a lot. Alibaba was going up a lot. Microsoft was going up a lot. Facebook was going up a lot. Like everything was going up a lot, but IBM during that time frame really wasn't going up, and it really wasn't going up that fast. It really wasn't going up. Really wasn't going up that much. So what I was looking at as cheap options in IBM, you know, since it wasn't really moving that fast, the options weren't really rich. So for $1.40, I bought the 109 call, and so it was bullishly skewed in the 104 put, mainly for protection. I'm hoping that I don't need it, but you know, I'm in this market definitely hedging. You know, this could easily, you know, we can easily rip down, you know, just because we went up 1,200 points on the Dow today, doesn't mean we can't give up 1,200 points tomorrow and definitely go lower. I mean, as you guys know, if any of us have been trading recently in the last couple months, definitely knows that we can go up 1,000 points and we can go down 1,200 points. We can go up 500 points and then give back 800. So, you know, you just got to be careful. You know, you don't want to risk your entire account, long or short. And after having, like on the S&Ps, after having 2 solid down days where we're down over 1,000 points on the Dow, and you know the S&Ps were down, you know, from high to low 2,500 down to 2,350, 150 points. After down moves like that, you have to know movement to the upside is going to happen sooner than later. It's just not going to keep going down, because as you guys know, the stock market moves up and down. It just doesn't keep going up. It doesn't keep just going down. And you know, they keep suckering shorts in, you know, little pops, little this, and people were shorting heavily at 2,350. I guarantee you people blew up their accounts today. Easily. And people blew up their accounts going down the other day because they thought we were going to get a bounce, and then everything went down, and now everything's going back up. And that's why it's best not to chase. If you're not looking at the market correctly, it's best to sit out, evaluate, and then plan a new attack, plan new entry points, plan new, you know, you gotta be careful. If Brian blew up half, you know, that's why if you chase it down and don't take profits, then you're going to chase it up, and then it doesn't work that way. You know, it doesn't work well that way. As long as Trump stays in Iraq, we should be okay. Hopefully right there we'll have a little get him to Twitter. I'm sure he's still got Twitter in Iraq. I mean, if he can call in nukes from Iraq, I'm pretty sure he can get on Twitter. You know. But I mean, that's like, people were shorting, and it's okay to short as long as you have exit goals. And you know, people will call me stupid. Well, we had another down day, but like if you're looking here, like the down days weren't, you know, obviously the data is what the data is. But like, what if we went down? People held their shorts overnight, and then instead of having another 700 point down day, you know, what if What if you went? What if we went straight up? What if we had? What if today? What if this 1,200 point Dow day and this 116 point, almost 5% S&P day was on Monday instead of having a Dow day? You would have been really hurt, but people get stubborn and greed really sets in, and then at like the 2350 mark, people were laying in shorts, and I guarantee you, people were like, "Oh, we're gonna have another down day on Wednesday. Futures are gonna be down. I'm just gonna let my profits ride. It's gonna be fine," And then you get in trouble if you didn't exit within the first couple hours of the day. You're gonna get in real trouble. And then as it's going out, like as positions go against you, if you don't have an exit strategy, you're gonna get in trouble. I mean, this will fry your short positions and put you in a really bad position. And there's not a whole lot you can do when playing defense except for switch sides, And then let's say for instance you switch sides to go long, but you went long up in here and you're too late, and then tomorrow we have a down day, then you lose again. So that's why when you're not seeing the market correctly, it's best to kind of take a step back and not re-enter the market or flip positions too quickly, because just because we had one up day doesn't mean we're going to have an up day tomorrow, and it doesn't mean we're going to, we could go to 2,500 tomorrow. We can go above 2,500 tomorrow, but we could also go like to 2,300. We can go to 2,350. We could definitely revisit 2,350. So, just like anything in life, tomorrow's not promised. Nothing's promised. News could come out. Anything can happen. Anything can happen in the stock market. As you can see, like no one thought we were gonna blast this high, but also nobody thought we were gonna blast this low either. Like no one thought we were gonna drop this low in 2018. People thought, oh, that the whole sell-off was done in February. We're headed back up. We hit new all-time highs. Life is great. After hitting all-time highs up here, 2940, it took 1, 2, 3, 4, 5, 6, 7, 8. So less than 2 weeks for us to rip back down. So just think about that. After hitting all-time highs, it took less than 2 weeks to go down to like 2,700. So, Matthew, there really wasn't a catalyst for today, was there? No, and that's what people are saying. Like, there wasn't a catalyst for it to go up, but there doesn't always have to be a catalyst for it to go up or go down. I mean, if you think about it, we're also trading a lot against a lot of machines, algos, robots. My buddy Jeff shared an article about that. I'll see if we can post that on Facebook or Discord for you guys to read. But definitely interesting that what we're experiencing now is probably not humans. Most likely robots that we're trading against. And it doesn't matter if it's news induced or not. Just follow the price action. Follow what's going on here. Yeah. Ray Lee, I think. In terms of catalyst, I think he was talking about like news driven instead of like technicals, versus RSI or support. We were sitting at 2017 support levels, but that doesn't mean we can't. Like, what happens to support levels? A lot of times we get rips like this too. What happens when you get a lot of rips? It revisits those lows. It revisits those support and tests them. It could test it once more. 3 times more, 4 times more. It could test it many times more before it goes up again. And if it does, it could also retest the support and go below. And the best thing that we can do right now as traders is just trade safe, and not get too greedy, take our profits. Yes, we're all leaving profits on the table. As you guys know, like I made a video last weekend that, about leaving profits on the table. It's okay. Like, we're all leaving profits on the table. But the thing is, keep in mind, you're leaving profits on the table. I mean, you're minimizing your losses. Banks pumped it today. Yeah, but banks have been selling off for a while. Bank of America finally, hit 2266, a low, and we're talking about like multi-year. We're talking like multi-year lows on here. GS has been just terrible. I mean, GS. In November, we're talking about last month, November, GS was 230. I'm sorry. It went all the way down to 151. I mean, it's incredible. I mean, it's just incredible how much this stock has dropped. And less than a year ago, it hit all-time high. It hit 275. And was trading within a range. And as you can see here, if you look here, GS like triple topped up here, and then just has been on a constant downtrend. And this was just the waterfall. Since November, it's just been bleeding pretty much. And any update was shortly followed by a rip down. Gunther, I think they wanted those sensational headlines, sucker new money into the market and steal it with a bigger bear move. Yeah, I mean, this could easily, like I was saying, Gunther, we could easily hit lows. We could easily go revisit it just because we had one up day out of the 10 red days we had. Doesn't mean we can't have another down day tomorrow or Friday. Like we could have another update tomorrow, and then Friday comes along and erases all those gains, and then we have the worst. We're currently on track to have like the worst December since the Depression. We're down some 13% this month. I think we got back 4 to 5% today, so we're now only down 8%. But normally in December we usually go up. Usually we go up in December, but that's why I say you can't always follow stats or statistics. You just got to follow the pricing. Tesla. As we've been talking about this, like one of my biggest regrets over the last couple of weeks, actually probably all year, is not shorting long-term resistance up here in the 380s. And when I say long-term resistance, we're talking years. We've been up here in the 380s before. It came back up here. It went from 380 all the way to 294, 292, I believe, and that was it. But I think that obviously this is my opinion. I think Tesla's always been a stock that trades in a range for the last couple of years. As you can see this year, every time it's fallen way below, it gets propped up. It goes up on artificial news like Elon's tweets or other things. It gets propped up, and then people take profits, sells off, gets propped up, takes profits, gets propped up, and now we're you just have to understand. You just have to understand each stock has its own personality. Each stock has its own catalysts. Each stock has its own support and resistance, and you just trade accordingly. Chicago PMI last month will bring things back. I can see that. Easy, yeah, I did see your chart in the S&P. It's definitely helpful. Thanks for dropping that in the Discord. So I mean, Tesla, I definitely regret not shorting it, but I mean, we were making money in other places, and you can't be in everything. Like this market right now, as options traders, like we're really busy. We're really busy right now because there's so much volatility. I mean, it's great for options traders, not so great for the stock market as a whole, not so great for 401ks and long-term investors. But as options traders, this is where we're gonna make the money. So similarities to the Great Depression. I'm studying and researching months before the Great Depression. It's scary. Yeah, I mean, I don't think we're gonna go into a depression era, type, maybe recession, but I think that a lot has to happen before that. Like jobs need to start drying up, unemployment needs to go up. I know one major factor right now is consumer credit card debt, and people are still paying their mortgages. So when things like that start happening, then you want to get more concerned. But right now I think numbers and companies are posting great profits, great earnings, but the market's not reflecting that. And I think the reason why the market's not reflecting that is because 2017 was just such an exceptional year that a lot of this stuff is priced in already. I made money on Tesla when I shorted 375. Crypto slice, congrats. Let's see here. But yeah, that was pretty much my positions. That's kind of like my spiel. I think for for SPX or for the S&Ps, you know, we're still in a lot of trouble here because we're still below. Like I was telling you guys, we really needed to bounce like 2600, and we were bouncing at 2600 until we just broke through. And just as you can see here, just as we've been saying for weeks, once we broke through 2600, just opened the floodgates and we flushed all the way down to 2346, and now we're getting a little, we're getting a little bounce. But as you can see, this bounce, I mean, it's a major candle, but it doesn't put a dent into what we've lost. Now we could, if we can come back above 2600, then that would definitely be interesting. But if it hits 2600 and then gets rejected again, we're definitely gonna be having some down moves. The one thing that I'm grateful for today is the up move. I've been waiting for an up day, is because premium has been through the roof. As you can see, premiums came in a little bit, not a whole lot, but it did come in a little bit. So option sellers made some money, but premium did come in a little bit. But VIX, if you're looking at the VIX right now, we reached on Monday. Before this week, we were really trading in a range between like 25, 27, and 15, and we were just kind of pinging down back and forth, which is great. Makes it a great options trading environment when the VIX is fluctuating and volatility is fluctuating, and creating a two-sided market is really great for options traders. But it was getting a lot harder for me to buy premium once the VIX broke above like 2750 and kept increasing all the way up to 35. It made the positions that I normally put on super expensive, which also increased the risk, because also if we didn't get the move, theta and everything was just going to chop at that like nothing. So I haven't been really laying in thick or really laying in a lot of positions, just because we haven't had a two-sided market. And for a fair market, you need a two-sided market. You need, as you can see, if you're looking at the VIX and kind of comparing it to the S&Ps, we really need a two-sided market for both option sellers and for option buyers. It creates opportunity. VIX, IV inflates and then it deflates, and then it creates a good market whether you're buying options or selling markets. Options, it creates a great opportunity for you. Above 2750, really only was looking at opportunities for selling options, because up in here it gets a little dicey, and your options your stocks need to move a lot to make some money. And if you're looking at like some of the things that were priced in, I know it went up like $30, but I was sharing with the group, these are up now 500%. But I was looking at Tesla today, and when Tesla was only up, when it was up like $20, and this kind of shows you how important option pricing is for you. When Tesla was only up, when Tesla was up $20, these were only up about 100 to 125%. I was sharing with our options trading group. But once it broke above $20, it went beyond the expected move, and these are now up 500%. So this kind of gives you a nice indicator of how you need to use the expected move in option pricing to really understand where gains start to snowball and where it's harder to make gains. So it was definitely harder to make gains when Tesla was only up 20, but then when it broke above 20, as you can see, that quickly snowballed, went from 100% winners into 500% winners. So it's a very good example today on using the expected move, and then once you get beyond the expected move, how that looks. So that way, when you're trading within the expected range, it's good for option sellers because it's easier to make money. It's harder for option buyers to make money when we're kind of staying within the expected move. So I know I'm talking a lot. You guys got any stocks you want to look at? I don't know. It's been kind of quiet. I was also worried because like on Monday our Discord channel was super active. People were posting on there, and then I got concerned today because we had a 1,200 point up day on the Dow. People should have been posting way more, and they were quiet, which kind of concerned me that people were getting a lot of losses. Like a lot of them were staying short, and that they lost all their gains that they made in the last week or so, or even the last month. So, always send out the health check. Amazon. So Amazon, I was seeing our group here, you know, stocks like Amazon, they kind of have, and Netflix, whether they make money or they don't. Ben O'Cannon, I'm sorry to hear that. You know, Amazon, if once Amazon drops a lot, you're always going to have the dip buyers, the long-term holders, the people that want to hold it for 5 years, 10 years, 20 years. So just always be concerned. Just always look out for that. You know, from its highs here, 2050, it came down to 1,300, which it hasn't seen these levels in a while. And also, Google went below $1,000, which hasn't been, you know, it's been a long time. And if we're looking here, really, there's not much support. It has bounced back here in the 1300s before, 1330, 1360 range. I wouldn't say it's like very strong support. Definitely way better support at like 900 or 1,000. So between 900 and 1,000 is much better support. Right here it's kind of weak, but that's where it bounced again today. So I don't know if it's gonna go up to like 1,500, 1,600, but you know, technically from what I see here, we're still in a downtrend on Amazon. You know, we're still below, and also like right around like 1775 area. It's definitely tough. Right below 1,800 has been tough on Amazon since October. So I think it would be good to be long until like 1,800, depending what tomorrow looks like. You know, if tomorrow is just bloodshed, it was a nice setup for bears, you know. But on days like today, though, it makes it very hard to get short on days like today, because people were definitely shorting all day today. People were definitely shorting. You know, right now we're programmed like in 2017 we were programmed to buy the dip. Now we're programmed to short the rip. So when the S&Ps went up and then was looking like it was going to dip here, it was like, oh man, we just ran for an hour and 15 minutes straight here. We just ran for an hour and 15 minutes straight. And then it started to show some weakness. As soon as it started to show some weakness, I guaranteed you people were loading in short. And then it was staying the same price, and then it kind of went up a little bit, but then it started to go down a little bit. Instead of looking at this as like a consolidation period and kind of a rest period, they were looking to short it, thinking it was okay. It went up to 2410, 2420 area almost. You know, it'll come back down to below 2400, so we'll short that. But then it went the opposite direction. As you can see, we had some definitely confusing signals in here for people that are shorting. So FedEx. So FedEx went down due to earnings, but here they're at, I mean, yeah, I mean they're at multi-year lows as well. I mean, it's bad when a stock gives up its 2017 gains, because 2017 was such a great year for stocks. I mean, the last time it was down here was June of 2016. So quite a long time ago, and ever since then it was going up. But you know what I would say here, like it seems like the 160 area back in 2016, it like the 160 area, and you can see here it took quite a few months for it to break above ones out of the 160 range. And what caused it to get out of the 160 range? And looks like FedEx is a very catalyst-driven stock, very news-driven stock. Earnings right here was essentially what broke it out of this range here. So as you can see here, earnings were posted here, and we had this gap up, and it's what broke it above 170, and then it kind of just kept pushing through the rest of the end of 2016 and 2017. So I think for FedEx, I mean, we're definitely in trouble seeing multi-year lows here, and it needs, since it just had a news catalyst, I wouldn't be surprised if this has lower. I mean, honestly, you know, it had bad earnings, so it dropped. And based on FedEx wanting to move on that, you know, based on earnings and Catalyst, you know, they need to they gotta post some good numbers for this holiday season. That's what it comes down to. Netflix. Jordan wants to look at Netflix. Let's go to, you know, like I said, on Amazon, Netflix is also like a cult stock, also like a very cult fund. Everyone wants to have it in their portfolio, even though the financials don't add up. I mean, they're deeply in debt. They pay a lot on their debt. You know, we got increasing interest rates. They're expected to spend $10 billion on content in 2019. But at the same time, they've shown they've been able to grow their subscriber numbers. And Wall Street only cares if they grow their subscriber numbers. And as you guys know from Amazon's story, is they lost money. I mean, Amazon didn't post like a profitable quarter in like 23 years or something like that. And then they started posting profitable quarters. And now, you know, Wall Street didn't care about that. They care about, you know, you always keep in mind Wall Street and long-term investors don't care about what the stock is doing today. They care about the future outlook. That's why it's always about the guidance. Even if they, let's say a stock does terrible on earnings, but then they say, you know, we're going to raise the guidance for next year or next quarter to 50%, or we're going to be up 25% year, you know, whatever the case is. You know, it'll probably go up, even though they posted bad earnings. But Netflix also, I mean, it filled this gap down here, which we had in January of this year, and I would say any stock right now, as you can see, we all have these big green bars here. Just because, like I was saying earlier, just because we have one big green candle doesn't mean it's going to go up to like 300. You know, I'm honestly trading very, very, I won't say scared, but very small, and not trying to lean too much to one side or the other. You know, always keep enough capital in your account to play defense. Like right now, I'm pretty bullish in terms of my numbers here, my deltas. You know, my deltas are like 200, but at the same time, I have enough capital to defend those positions if they go against me, or put on new bearish positions if I wanted to go bearish, and I could let those positions ride out. But, you know, Easy, I appreciate you, man. Take care. You know, I would be very aware of something like right now, since 300, it's been descending. And even before that, you know, up in like the 380 areas, you know, ever since it had this last push after earnings up to 380 back in October, all the highs has just been getting sold off. So, you know, we went from 380, came back down to 271, went up to 330, came all the way down to 249, went up to 300. But as you can see here, these highs are getting lower. So I would definitely be careful about that, because it hasn't bucked the trend. Just because we had one green day, it has not bucked the trend here. We're still lower. We're still descending if you're looking at it that way. You know, it's still higher than where it was a year ago. Which a year ago we're at 185. But I mean that gap. I mean, it also was 423. So the gap to 185 is definitely getting a lot closer. I end up getting outright before SPY pop, save my puts and most profit. Kyler, that's what you gotta do. You gotta protect your account. Kyler's got the right idea, which I've been saying for a long time, is you got to really, if you have gains, keep them. You know, the market's idea is to drain your account. The market wants your account to go to zero. They want you to go to zero. And they play games. I mean, the market's not fair, and if you understand that, and thankfully we trade options, so we understand and we can adjust to any climate. We can adjust, you know, we can adjust to these pops. We can adjust to these sell-offs. We can adjust to anything. You know, people that are holding long stock or shorting stock, it's definitely a very tough market. You know, for options traders, it's definitely easier because we can constantly adjust. you know, for people that are buying stock and shorting stock, it's definitely a lot harder. The volatility is a lot harder. Okay, we looked at Amazon, we looked at FedEx. Jeff, man, thank you for the $5, man. Appreciate it. Easy, thanks for the $5 earlier before the stream. Jeff, appreciate you. Jamaica's off the grid for 2 weeks. Yeah, Rich, our buddy Richard, hanging out in Jamaica. Definitely jealous up here in the Chicago area. Definitely nothing close to Jamaica here. Raymond, Dad, appreciate you. Thank you so much. Anyone else has any stocks, any questions? We got about 15 minutes left on the stream. I talked about mainly what my beliefs were and my positions for most of the stream, so I want to give you guys some time to chime in if you guys have any questions. Seems like people did mostly well today, which I'm glad to see. USO. Easy, I appreciate you, man. So USO, if you guys don't know, I did talk about it. I've been holding on to 12 puts. I'm sorry, 12 calls on USO. I put these on. Let's see, when did I put USO on? Okay, so here's some context for you. December 7th, I bought the 12 calls for 25 cents each, and that was on December 7th. So it was when it was consolidating right in here. I thought we were consolidating and we were going to go higher, and the news. That's why you got to be careful about the news, because people were cutting production and stuff like that. And obviously, you got to be very careful about the news, especially with oil. It does cause it to rip up, but it also causes it to rip down, and it doesn't really make it. It doesn't really make it. It makes it tough to trade. So on 12.7 back in here when I was adjusting, I thought we were going to have maybe some forward momentum back up to 12. That's why I put that trade on. I've definitely been having. Obviously, I've averaged down a couple times on here. But I stopped averaging down, and just like the rest of the market, you know, we had one green candle, but obviously it was 16 in October, and now we're at 9, so we're almost cut in half. So don't take that lightly. Nvidia or MU? Oh, Nvidia. Easy, appreciate it. Crypto, thank you. Nvidia is one we've been talking about the last couple weeks, just because it went from 292 all the way down. Now we're at like 133, and we did touch 120-ish area. And you know, looking at it, you know, Nvidia, I mean, this is one horrible looking chart where it pretty much gave up all of its gains from, you know, the past a year and then some. You know, we're 2 years ago it was trading at like 118, and now we're at 133. So really in 2 years, if you held for 2 years and you didn't sell, you're really only up like what, $15 or so on this whole position. So from 118, now you're holding 133. You didn't sell, and now it's 133. You know, you've only been rewarded like $15 on this, and it's just been slaughtered. And I think a lot has to do with like Bitcoin and cryptocurrency and the cards and all that. And you know, 2017 was the year, obviously, you know, of the year of the crypto boom, you know. And you guys know how that's happening, or it's in progress right now. But Bitcoin is at 20K now. It's at like 3 something, or it touched 4 over the weekend. Any case, you know, and now Bitcoin has to be at like 7,000 for it to be profitable to mine. At least that's what my after researching and taking a look at it, Bitcoin has to be at 7,000, and I think people are just less excited about Nvidia. Same with MU. Even though MU's in a little bit of a different business, but I mean these stocks just went up too fast, like in the late 90s and then 2000. These stocks that just go up too fast and too much. You can't ride it forever. Like people were like, well, I mean, for Nvidia to go from 95 to 292 is an amazing run. To go from a low of 95 all the way to 292. You tripled your return. You won. Get out of the market. Take your profits. Even from 95 to 100, or I'm sorry, 200. You won. You won anything above 180. You have more than 100% return. After that, the greed factor sets in. They think like Nvidia, is going to be like an Amazon or something like that. But Amazon, obviously, in the last couple of years went from 747 to 2,000. But even before that, they thought they were catching Nvidia early. But I mean, Nvidia has been a company that's been around for a long time too. The difference between companies like Amazon to go from 284 in the last 5 years, a low of 284, up to 2,000, it's not because they just sell one product. It's because Amazon is a multifaceted enterprise. Nvidia is not. They're in one industry, and they sell basically the same thing, one thing. So, people get confused when stocks keep going up and there's a lot of FOMO and there's a lot of things in the air and people get a taste of getting money. People get a taste of hey, one day I'm going to get this idea in my mind of, hey, I'm going to buy Nvidia. It's only $95. It's going to go to $1,000. I'm going to be a millionaire by the time I'm 50 or 60 or whatever the case is. And then they put their money on the line and then they lose it. It's unfortunate, but that's why you always have to control your gains. That's why you got to control your losses, and that way you don't get slaughtered. Remen, appreciate it. Definitely appreciate you guys. Thanks for your condolences. Yeah, it's definitely was a rough Christmas, but it's definitely a reminder of why I do what I do, why I trade options, why I take risk, is because life is short and you got to do what makes you happy. If you're plugging away at the same job 9 to 5, you're not getting anywhere. For me, it's time to change. Like if I hit a dead end, I turn the other way and I go a different direction, and this life just goes by really fast, and it's definitely a good reminder. And life is to be lived, not to be sitting stagnant. And you want to build a nice life for yourself and for generations behind you. You want to leave a good legacy, and trading options and owning businesses and creating streams of income. That's what I like to do. So. We got about 7 minutes left on the stream. If anyone's got anything else, otherwise we're gonna sign off here. Easy and Jeff again, thanks for your donations today. Appreciate you. If you're new here, say what up. Definitely want to meet you. If it's your first time here and you're not yet a subscriber, hit the subscribe button. We actually over the Christmas break, we passed over 4,200 subscribers. We're almost 900 in our Facebook trading group, and we passed over 200 in our Discord, which is, we launched Discord about a week and a half ago, which was it's just been crazy. Ed, nice to meet you. I know we got some new people here. Matthew, it's okay, man. We'll get through it. Risk reward, that's what life is about. Yeah, so, you know, in terms of tomorrow, like I was saying earlier in the stream, just be careful. Just because we had one green day doesn't mean we're going to have another green day. Just because we have one red day or multiple red days doesn't mean we can't have green days either. You know, the Bulls and the Bears, it's a two-sided market. It happens, you know. And right now, if we can break above 2,500, definitely would be bullish to 2,600. You know, for my accounts personally, from 2,500 to 2,600, and then 2,600 is going to get very, very dicey. Alex, new subscriber here, love the videos. New to trading, about 8 months, blew myself up selling a couple call spreads on SPY right before the crash. I mean, that definitely hurts, Alex. But as long as you learn from the experience, glad you're here. You know, everyone here is here to learn. Everyone here is here to make money. Everyone here is, you know, day in, day out. This is what we do. So we all make mistakes. I mean, I make mistakes every week. No one's beyond mistakes. I mean, the best traders in the world make mistakes because nobody can really outsmart the market, you know. Do you trade live on YouTube? I don't trade live generally on YouTube, Rocky. I haven't done any live trading. I've actually been new to streaming on YouTube, and what's worked so far is 30 minutes after market close to talk about the days. And so I've been kind of trialing and airing it out, like seeing what's been going on, basically. If people were going to like the live streaming or not like the live streaming. And surprisingly, people like the live streaming. I didn't know. Chalk on the losses to learning fees. Yeah, I mean, we all learn. You know, definitely get connected to our community. Get connected to, you know, you can ask questions, bounce some ideas around. I mean, everyone here, whether you're an experienced trader or like a new trader, everyone in the community is pretty positive, pretty uplifting. No one's going to call you stupid or dumb or anything like that. Like, actually really impressed by the crowd that we have here. Rocky, I trade only options actively. I do hold stock like long term, but I don't really cover that because it's nothing that I actively manage. Options you have to actively manage because of the time restraints. Like, trading options is my short-term approach. Buying stocks is long-term. I haven't actually bought stocks in a while, but I mainly do options trading. We are the OGs. There's a lot of people. Easy. A lot of people were here earlier. A lot of people were in Discord. Yeah, FC's here. FC's here every day. Matthew's here. Crypto Slice. Jeff. Jason Bond lost 168K, and that's why like trading options is no joke. I was telling someone, like, you can't just go in and trade options because eventually, if you're used to trading other things like small caps versus penny stocks, you know, they call them small caps because they want to be nice. They're essentially penny stocks. You know, Jason Bond. You know, I don't really know him. I don't want to talk bad about it, but let's just talk about it. You know, instead of hedging, though, you chose to get yourself into a position to lose. Options trading is all about discipline, and I think trading in general is also about discipline. But options trading, like the people in the stream here, options trading is a lot harder. But to understand, but we profit way more consistently. Micah, what's going on? Options traders profit way more consistently than penny stock traders or regular stock traders. And the reason for that is because we have a lot of tools. But you have to understand how to use those. And if you don't understand how to use those tools, you can't just buy calls. You can't just buy calls when the market's going up, and you can't just buy puts when the market is going down. If you're holding positions overnight, if you're doing certain things, especially if you're doing things on size, you definitely should hedge. And even though I trade small on my accounts, I hedge all the time. And when I'm in a position, when I start to lose, I play defense. Like, and if the worst thing that you can do as an options trader is put a position on, let it ride out to zero, and say, well, I lost. Like, you have the opportunity. as an options trader to fight back the market, take back what's yours. Don't let them take your money. And unfortunately, he didn't do that. You know. But I guess that's what separates us from them. You know. Do you prefer covered or uncovered options? Doc, I think covered, like if selling covered calls or selling covered puts is good when you're starting out and you're holding stocks. Like right now, probably if you let's say you had 100 shares on Facebook, and you didn't want to sell the shares, you know, definitely selling calls to make some short-term money would definitely would be the play. But if you want to make bigger gains and bigger returns, you would do uncovered. You know, but if you want a safer play, you would do covered. You know, it really depends. We learned to gain trading tools and make money. Yeah, I mean that's what it's about. And every strategy doesn't work out all the time. You know, you have to apply. What makes it hard is you have to apply the right option strategy for that time in the market, what that market is doing at that time. You can't just do whatever you want. You can't just put an iron condor. Like if you put an iron condor today, you got ripped apart. You know, you got ripped to shreds. You know. Tell me about it. Here we won't tell you what to trade, but Nick likes to give you the tools. Yeah, I mean, and what makes it hard for people selling like options alerts and news alerts and stock alerts and say, hey, you know, just because I traded it is good for you too. And I find that that's not the case, because everyone here has different personalities. Everyone here has different risk management. Everyone here is just entirely different. You know, just because I put a trade on, you might not even actually be able to stomach that. And if you put a trade on, I might not be able to trade. Like people have been telling me, hey Nick, I put the same trade you put on, but I didn't make money, but you made money. Why is that? And the reason why is because my personality and the way that I align my emotions and the way that I trade has allowed me to, when I put that position on, I made money and you didn't. It means that trade wasn't right for you. It wasn't right fit for your portfolio. Also, when I put a trade on, it may be due to me balancing something else out in my portfolio. All the positions in my portfolio aren't always meant to make money. You know, some of them are meant to hedge. Some of them are meant to balance things out. And if someone sees that, hey, you just put a trade on for shorting Alibaba, but they didn't realize that I'm shorting Alibaba to hedge against my long Microsoft position, but they don't have the Microsoft position, and Alibaba goes up, they don't make money, but on the whole trade, I made money because Microsoft went up, and Alibaba, I lost a little bit. So, you know, you gotta, that's why I never want to sell stock alerts or trading alerts. Like I do post where I trade, but I just do that for learning purposes. I don't do that so that way you guys can copy, because most likely, you know, you're not going to have this, your portfolio is going to be completely different than mine, and that's fine, and you trade differently than me, but everyone has to figure out what the best approach is for their personality, their positions, and how much time. Like I have a lot of time to trade. Some people don't have as much time as I do, so you got to put on different positions because you can only be in the market an hour a day. You know, you're going to be doing swing trading or buying stuff out like a month out, 2 months out, or whatever the case is. So there's a lot of factors. I trade mom and pop while Nick trades lobster and caviar. Easy. It's taken a long time. You'll get to where you need to go. You get to where you need to go. But anyways, we're a bit over an hour. If this video was of value to you, hit that like button. You know, I'll be live streaming tomorrow as well. Push the like button if you're new here. Hit subscribe. Definitely appreciate everyone here. You guys have a great rest of the day. It's always us versus herd.